Markets enjoy a relief rally as dollar demand sags. Asian stocks slipped at the start of the week, with Chinese and Hong Kong stocks leading the losses as the new local COVID-19 cases in China rose to a two-year high, hampering the outlook for the economy. Amid shutdown measures, Toyota announced a suspension of production in China's Changchun city. Adding to a cautious tone among investors, Washington has warned Beijing against providing military or financial help to Russia. Elsewhere, the Reserve Bank of Australia stated in the minutes that the war in Ukraine was a major new source of uncertainty. Meanwhile, Russian and Ukrainian delegations held a fourth round of talks, but no progress was announced. However, U.S. stock markets bounced after a three-day slide on Tuesday, while Treasury 10-year yields dropped from the highest level since 2019. Investor sentiment improved as inflation worries ebbed and oil prices kept plunging. Also, New York manufacturing came in at much weaker than expected, easing worries about more aggressive Fed tightening. The S&P 500 rose 2.1%, the Dow Jones Industrial Average gained 1.8%, and the Nasdaq rallied 2.9%. Asian equities were mostly higher on Wednesday, with Chinese shares bouncing strongly after a sell-off. Shanghai Composite rose nearly 3.5% as COVID-19 cases today came in at just above 3,000 versus 5,000 a day earlier. Hong Kong's Hang Seng rallied over 9% in spectacular recovery from the latest plunge. In Japan, the Nikkei 225 gained 1.64% after fresh data showed that exports grew 19.1% year-on-year and imports rose 34% year-on-year in February. In Europe, stocks closed at over two-week highs on Wednesday, with almost all sectors in positive territory. Bucking the trend, utilities fell nearly 1%. The Pan-European Stock 600 index ended 3.1% higher. Investors cheered reports that progress was being made in ongoing talks between Russia and Ukraine. Russia's Foreign Minister Sergei Lavrov said that some parts of the agreement were close to being agreed upon. Equity markets also rose after Chinese Vice Premier Liu He said that Beijing would roll out more measures to boost the Chinese economy. In individual stocks, Inditex fell 2.5% despite the Spanish clothing giant reporting a sharp rise in 2021 revenues. The company also said that store and online sales between February 1st and March 13th are tracking 33% higher year-on-year. German carmaker BMW rallied 4.1% despite lowering its profit margin expectations for its automotive segment for 2022. Meanwhile, the Fed on Wednesday approved its first interest rate increase in more than 3 years and said it would hike another 6 times this year, pointing to a consensus fund rate of 1.9% by the year's end. The FOMC raised rates by a quarter percentage point, as expected, bringing the rate now into a range of 0.25% to 0.5%. The central bank officials indicated that the rate increases will come with slower economic growth this year. In addition, the committee expects to begin reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities at a coming meeting. Powell hinted that the balance sheet reduction could start in May and said the process could be the equivalent of another rate hike this year. Stocks rallied following the Fed's decision. The Dow Jones Industrial Average rose 1.5% after turning red initially following the release of the Fed's statement. The S&P 500 added 2.2% and the Nasdaq Composite gained 3.7%. Meanwhile, the dollar witnessed some long liquidation after the Fed announced the interest rate to curtail the soaring inflation. The decision was in line with the estimates, while the announcement of 7 hikes in 2022 has surprised the market. Still, the meeting failed to impress USD bulls. The USD index extended losses to 98.30 before finishing the day in the 98.50 area. Early on Thursday, the index struggled to regain the upside momentum, looking directionless during the Asian trading hours. Asian stock markets joined a rally on Wall Street, with Japan and Hong Kong leading a jump in regional stocks on Thursday. Japan's Nikkei 225 soared 3.5% and touched a two-week high in recent session, while South Korea's Kospi jumped 1.48% and Australia's benchmark added 1.4%. The MSCI index of regional shares rallied 2.5%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.